Hello, everyone. Good afternoon to all of you. I'm very pleased to invite all of you today. Today, we are very excited to say that we at Team Mirai are launching a new fund, Mirai Asset Infrastructure Fund, and I'm joined by Fund Manager Bharti Sawant, who will discuss on the key aspects about our new fund, Mirai Asset Infrastructure Fund. Before starting the call, I want to share a few insights on the overall sector of infrastructure. So I'm sure infrastructure funds have been there for the last 20 years now, but investors and partners have not had a very great experience when they've been investing in infrastructure funds. And maybe there are a lot of reasons why investors have not had the great experience of investing in infrastructure funds in the past. But what has changed to make infrastructure a broad theme, and why we believe infrastructure will be the theme to invest for the next decade or so, or for the long term, is what we will try and decipher in today's webinar. Like I mentioned, I'm very happy to say that Bharti Sawant has joined us today for this webinar. Bharti has been associated with Mirai Asset for now more than 10 years and has been tracking capital goods and infrastructure as a sector for Mirai for more than a decade. So welcome, Bharti, for today's webinar.
Thank you, Vaibhav.
So Bharti, like I was discussing, investors in the past, have not had a great experience with infrastructure. In fact, a lot of investors who invested, during the peak days of 2007-8, maybe have not had a great experience, even with a 5-year, 10-year investment time horizon. But in the recent times, we've seen a lot has changed in infrastructure. And I'm sure when we see our lives itself, we can see the huge development which is happening in India, whether it's airports, railways, road projects, the overall economy, you can see a significant improvement in the infrastructure. Whether that same growth that we've seen in infrastructure as a sector will translate into returns for investors through this fund is what I'm sure all investors and partners would want to know. So what we'll try and do is maybe have a question and answer sort of session where I'll try and ask some questions which are frequently asked by our partners and investors, and would request you to maybe share more insights on that. And if you have few slides that you would like to share for those, please feel free to sort of share them as well. So Bharti, coming to the first question, what changes have you witnessed in the Indian infrastructure sector space over the last decade or so, and why you think infrastructure is now at the cusp of a major up move for the next couple of decades?
So, thank you for the question, Vaibhav. I'm just sharing my screen and then give you some color. If you can see infrastructure. If you look at the previous investment cycle, the previous investment cycle started somewhere around 2000 2004 and continued until 2008 to 2012 period. A large part of the investment during that particular phase was creation of basic infrastructure. And when we talk about basic infrastructure, like in normal layman language, it's always roads, because even today, like we are living in Mumbai and we know the kind of infrastructural problems we are facing, which is largely led by road. So we can relate to it. So road is the basic infra which starts with and is the most important aspect. So that was where government's focus was. In fact, if you see, the golden quadrilateral came into existence during that period, which boosted the GDP in a significant way. So, but now when we talk about, when I say lastly, it was roadways and power, because power, as we know, is core for any growth. It will be required at each and every phase of the investment cycle. But coming back to this period versus last, what changed? So, as I said, there were two sectors. Now there are multiple sectors at play, because we are moving towards digitalization of the economy. So, apart from having the basic infrastructure, which is your roadways, airports, airport connectivity, or your even metros, because metros have now become important because the traditional railways can no longer reach the destinations. So, these are the creation of new projects or new transport ecosystem, but at the same time, when we are moving towards more digitalization, we also need to invest a lot into creation of digital infrastructure. And what goes into this is the core is power. So now we have many more sectors, as you can see from this slide. We have many more sectors. It's a much more diversified sector versus which was more confined to probably three or four. And hence, we are confident that this sector, we are just entering into the investment cycle and there is a huge headroom for growth. Also, just to touch one more point, if you can see what are the sectors that we are accounting for as part of the infra theme. So it starts with cap. So I'll just give you a random thing. When we look at an ecosystem development, we look at the basic ecosystem would cover your commercial, retail, hospitality, your residential, 24/7 power, and telecom infrastructure. So these are the core for any infrastructural development, and hence you can see that forming part of our infra theme. The new generation or the new themes that have come is the data center as well as EMS. So data centers largely because of the growth in the digital ecosystem, you need data to be stored in the country, and EMS more because to support the electronics growth, because India lacks on the electronics front, and hence the theme seems to be a very broad-based theme, which gives a larger opportunity to play.
So I do right. He pointed out, Bharti, that the old infra versus the new infra is absolutely a different infra with a lot of more diversity in sectors and a lot of new emerging segments which investors can look at. And I think that's a brilliant point for investors to look at when they look at how they should invest and look at the infrastructure theme. So, Bharti, now coming to the second question, that while we have seen significant development in infrastructure, what are the growth drivers for this segment going forward? Also, there have always been apprehensions like this side, we discussed, that infrastructure tends to be a more cyclical sector. And the experience of many investors have not been that favorable. What are your thoughts on how things have even changed and whether infrastructure is now more structural in nature?
So thank you for the question again, Vaibhav. So I'll just take you through slides, few more slides. If you can see, hope my slide is visible. Yeah. So I'd just like to draw attention to this graph here. What does this graph denote? This is the gross capital formation of our country. And as you can see, we are at roughly closer to about 36%. GCF just explains the kind of investments that goes or the kind of capital formation that happens in the country. And if you can see the orange bar chart over here, so as I mentioned at the start, the investment cycle, the previous investment cycle somewhere started around 2000 phase. So 2000 to 2008, if you see, the private sector participation as part of the investment cycle moved from sub 9% to more like 18%. Then we saw a sudden decline in the private sector participation, which bottomed closer to about 10% during 2021. And this is the period that we all know was a period of significant slowdown, and the expectation was always that the order inflows would come in, but it took a longer period of time. What went wrong during this period and why we believe that the cycle is turning? So if you see, 2008 was a period of GFC, global financial crisis, followed by a period of domestically a lot of scams getting exposed, which is your coal scam, telecoms, multiple scams. Hence, there was complete policy paralysis in the system, which means there was no decision making happening for some reasons. And hence, a lot of delay in getting certain approvals, clearances, resulting in projects becoming unviable. Then we saw post 2014, there was certain, when the new government came into picture, we saw there was certain decision making happening. Hence, investors' demand or the private sector participation marginally increased. And where did we see those investments happening? At the first, the government. So, government. Just to give you one background, large part of government investment typically happens in roadways, railways, and defense. And there are other sectors like your water and urban infrastructure. But major part of the investment are these three buckets. In fact, railways also started participating only over past 7 to 8 years when the budgets were merged. So it was largely roadways and defense, and then railways came into being. So during this period, as we know that road, since it is governed by the government, NHAI is the nodal agency, government tried to plug in a lot of gaps into that sector, and hence we saw the small efforts which were taken by the government to improve the transparency, to reduce the working capital, actually helped push the investment into that ecosystem, and hence private sector participation started building up. Then again came the period of 2017 to 19, which was led by your GST, demonetization, and RERA. These were major reforms which actually took time for the economy to absorb and settle with the new norms. And hence, we saw that somewhere it bottomed around 2020, 2021. Post that, again, if I just need to give you some further color, if you see this slide, since 2020, at this point of time, central government capex was at about roughly about 4 lakh crore. Since then, that number has increased to roughly about 10.2 lakh crore, a more than 2x jump in the central government capex, and likewise, state government has also upped its investment. During the previous period, it was rather more stable, but if you can see the chart this way, it has substantially jumped. So again, as I highlighted, large part of this investment was road and railways this point of time, and defense. But the heavy lifting was done on this side, which also gives confidence to the private sector that I'm here, I am also investing, let's participate. Because we all know government does not have the budget to drive the entire capitalization or the investment story in the country. Like in the past, it was led by private, and even in today's time, I believe it will be led by private. Again, to give you some picture in terms of what do we want from the government, it's largely to do with the policy initiatives. We only want stability, we only want policy certainty. Private sector only looks for the returns, and hence the initiatives like PLI, which is production linked incentive, ALMM, UDAN scheme, which helps airport connectivity or regional connectivity, all these schemes are kind of acting as a cushion and as a support for the private sector to come and participate, and hence we are confident that the private sector participation would pick up. And just to conclude, is the larger part of the capex that we are looking is on the power side, is on the data center front, is on the electronics front, which are all led by the private sector and PSU capex.
No, thanks, Bharti, for showing how the changes that have happened in infrastructure over the last decade or so, and why you believe that we are in the cusp of another up move in the infrastructure sector. I can see some of the participants have raised their hands to ask questions. So my request is that you can please put in your questions in the chat, and we'll be happy to take as many questions from you in today's webinar. So going forward, Bharti, we've seen at Mirai has been very stringent in launching products. I've been associated with Mirai now for about 15 years. You've been associated with Mirai for about 11 years. When it comes to launching new funds on the active side, Mirai Asset has been very choosy when we launch products. You've been associated with Mirai now for more than a decade, and finally we are launching an infrastructure fund. Maybe for the audience, I wanted to share one data point before I ask this question to Bharti. That look at the history of Mirai now about close to about 18 years. Mirai Asset has only launched 3 thematic products. We never launched any sector products or one single sector products. We launched 3 sector products. One, we had launched a consumer fund 2011 because we felt it's a long-term structural theme. If you see the performance of that theme, in the next 3 years from launch, it delivered about 15% versus 5% of the Nifty 100. We had launched healthcare about 7.5 years back. Healthcare also did exceedingly well from the time we launched. The next 3 years, we delivered about 30% return compared to about 15% of the index. And we launched a banking and financial services fund, which again, in the next 3 years, we delivered about 18% return. So Bharti, you've taken a long time to now launch an infrastructure fund, and you've been with Mirai for long. What makes you convinced that this is the right time Mirai Asset should be launching an infrastructure fund? And what sort of confidence you feel that this sort of theme will go structurally from here? Because we sort of launch only structural sort of products and not cyclical. So why you believe this will be a structural way to invest?
So, Vaibhav, in terms of as you rightly pointed out, Mire has been very focused on structural growth stories and has been wary of participating in the cyclical bets. And why we believe that infra is not a cyclical. So, just to give one clarification, we believe that infra, the way we are looking at is, there is a structural change happening and we are moving towards a structural growth, at least for the next foreseeable future, which is closer to a decade, that we can say with confidence that the growth should sustain. And where the growth is coming from is more, again, as I highlighted, the key growth drivers are data center led demand, electronics and semiconductor led demand, or even the renewable push that we're having, plus the change in the power consumption because we're moving towards more manufacturing and urbanization, which is leading to more power demand. So these are all structural changes which has happened in the country. And the core to this is the core of any growth is power. So we are seeing investments happening into this space where it has just started. The announcement of key orders have just happened. The earnings are yet to be visible. So I think this investment story we have participating at the start and would sustain for a longer period of time, and hence it's not very cyclical. Second and most important aspect is, like said to your earlier question, that we are not much dependent from a funding perspective on the government, but rather look for stability and policy certainty, which again gives us confidence that this structural theme would sustain for a very long time, and hence Mire is looking and Mire is more confident of launching this fund at this point of time.
Sure. So, but there have been about 18 infrastructure funds before us. So, two ways of looking at it, that there's a lot of competition already there in the market. The good part is maybe some of the things that they are doing, which helps you differentiate the way you will manage the portfolio. So, my next question to you is, how differently will you approach this theme, and how would you say would your fund strategy be different from some of the peers which are there in the market?
So again, Vaibhav, so see, frankly, differentiating too much is difficult. Let's be frank, because this is an infra theme which is concentrated, yet the approach could be different from fund manager to fund manager. I can only talk about my approach, how we are looking at building or looking at this space to invest in. So, as we have been discussing a lot about high growth phases as and the sustained investment, where the investments are happening, that is expected to deliver sustained earnings growth for us. Hence, a larger investment would be focused towards such high growth businesses, which you can see in this slide, that what we consider to be high growth is all centered around power, say data centers, semiconductors, solar, or even new options or new investment opportunities that may emerge are green hydrogen and ammonia, creation or setting up the infrastructure for EV or battery manufacturing. These are the opportunities that we are very positive on, and hence a large portfolio, a large part of our portfolio would be attributable towards high growth investments or high growth sectors, which will be mitigated or to balance out the risk that the high growth businesses carry, because we do understand that high growth businesses are typically relatively more expensive compared to other businesses, but it is giving you the opportunity to participate in the investment cycle. And hence, to mitigate the risk, we are balancing it out through investment in the matured portfolio, which is again more stable cash flow businesses. The growth probably would be in line with GDP or slightly better than GDP, but more or less stable business and stable cash flows, which will protect us from the downside. Lastly, on the satellite side, this is more of a tactical bets that we will be taking, either to play on certain regulatory changes or some corporate restructuring, or say if it's a pure valuation call on some cyclical bets. Because as we mentioned, a large part of the portfolio would be aligned towards more structural, but there would be certain cyclical bets which would be more of a value call or a point in time call where we see there is a turnaround happening, and hence will be part of the satellite portfolio for us.
So any sort of rough range you have for how much would be, say, high growth, mature, or special? Any rough numbers that you have in mind?
Sure. So, see, the high growth businesses, in order to generate alpha, the allocation, depending upon where the prices are or the valuations are at a particular point of time, the allocation could vary anywhere between say 40 to 60 or 40 to 70%, whereas the matured businesses could be anywhere between 20-30%. And satellite business should not be more than 10 to 15%.
So you will sort of have a barbell strategy where you will try and balance all these sort of three elements to create an approach. Fair.
Right.
So Bharti, you covered on the investment strategy, but like we said, infrastructure has now become a very broad theme, encompassing many subsectors within that sort of theme. So maybe if you can share your insights on what are your key overweight and underweight sectors within the infrastructure space, that will really help our partners and investors.
Sure, Vaibhav. So as I'm just I may sound repetitive, but as I've highlighted a lot on the high growth businesses, what do these high growth businesses actually mean? So when we're talking about investments happening in the space, the first benefit, because investment typically works in phases, right? The developers or the owners of the asset will do the investment, but they would be the last beneficiary of any growth, because once the project commissions, only then their earnings will see a change. So we will right now we are more focused because we believe that we are at the start of the cycle. The early growth phase, we will be playing with early beneficiaries, which is largely the equipment manufacturer play, and hence which gets clubbed as part of the capital goods. So we are positive on the themes like defense because of the import substitution and focus on building domestic capabilities. Same is true for electronics, EMS. Same is true for say solar. So all these equipments or the players who are getting benefit is on the capital good front. So a larger allocation will happen on the capital goods front.
Sure.
On the other side, in terms of other sectors, as I said, close to 40 to 60% could be part of the capital goods ecosystem. Rest would be divided amongst other sectors, like your real estate is looking. Given the correction, absolute correction that we have seen in terms of prices, real estate does offer opportunity to participate. Likewise, telecom is looking interesting because that is also part of infrastructure, and you have a structural growth in place in terms of earnings for the investments that has gone into. Uh, Utilities is one space, as I said, that which will be more back-ended in nature, and hence our portfolio positioning would be slightly underweight vis-a-vis benchmark.
Okay. So Bharti, infrastructure theme has done very well over the past 3-4 years. Do you see this momentum to continue? And considering that many of the stocks in this space have run up quite a lot, how do you think the valuation of this sector looks from maybe a medium to long term perspective?
Great. So the slide that I've put forth, Vaibhav, you can see the kind of performance, and as you rightly pointed out, that infrastructure theme has played out for the last 4 years. If as can be seen from the slide, where from CY21 to CY24, we have seen very handsome returns given by the index vis-a-vis the larger benchmark. Do we expect this momentum to sustain? We believe so, that it might potentially sustain, because the private sector capex, as I also showed in the earlier chart, private sector capex is yet to start, and hence we believe this investment momentum should sustain or could potentially sustain for a longer period of time. Secondly, in terms of valuations, I would not disagree that the valuations have run up, but I would just like to draw attention to this slide. Just a second. I would just like to draw attention to this slide, where it is clearly visible that across sector, most of the valuations are either trading at +1 standard deviation or closer to 1 standard deviation, with some sectors trading sub. So does this mean that the sector is expensive compared to historical past? Yes. But on an absolute basis, I would tend to disagree to an extent, and I will explain you the reasons why. Because, see, historically, as we discussed, for the longest period of close to 10 years, there were multiple factors which kept the investments at bay. There was per se very minimal growth happening across these sectors, and hence the valuations were where they were. But like for any other businesses, be it consumption or other things, where if the underlying business dynamics change, the same has to be factored in terms of valuation, which is what has happened. So past 4 years, because now we have visibility in terms of the order pipeline, firm visibility that would materialize. Plus, order inflows have started. It's not just a hope story, but it has actually materialized in terms of the order inflows, and the execution has just started picking up. So this gives the visibility for the re-rating, and hence I believe that even if valuations do not change and remain stable from here on, the earnings growth itself should give decent return, as in decent upside. The earnings itself should give decent upside for the sectors to perform.
So how do you think the earnings growth also is looking, Bharti, vis-a-vis the broader index? Is it sort of looking much stronger, considering that the order books of many of these companies are also looking strong?
Yeah, I'll just take you through one more slide in terms of earnings growth. So if you can see this slide, this is a sector, the infrastructure sector as we define it. So we have just classified the sector, and these are all Bloomberg consensus numbers. So if you see, for the current year, 25-26, it is largely close to about 20%. But as we move forward from 26 to 28, we are looking at a 26% earnings CAGR. One may say that telecom looks an anomaly with 84-85%, but that's largely to do with the negative impact or the Vodafone Idea losses coming off. Okay, so that is the sectoral phenomena. But even if you carve that aside, a large part of the infrastructure portfolio, as in the sector as a whole, would still give an earnings in excess of 20%. Hence, that is the kind of earnings growth that we are seeing, and that is the kind of visibility that we have from the sector.
So I think if the sector can provide more than 20% or 25% earnings growth, I'm sure the valuations look sort of quite reasonable from a forward earning perspective. So I think investors and partners should be mindful when they look at valuation. They should not look at only trailing valuation. They should start looking at maybe 1 year, 2 year forward earnings to figure out how the sector is sort of looking from a long-term perspective. Bhakti, one last question from my side before we open the floor for questions from the audience. And my request to everyone, please keep posting your questions on the chat, and we'll take as many questions as possible. So one last question, Bhakti, from my side is, how should one approach investing in this fund? How should you sort of look at an infrastructure fund separately? Because infrastructure fund or allocation to infrastructure may also be within the sort of allocation of any diversified fund, be it a large cap or a mid cap, flexi cap sort of product. Do you believe infrastructure needs a separate allocation from the existing allocation it has in the benchmark?
Vaibhav, to this question, I would just like to say, see, historically, this sector has gone through a lot of ups and downs, and people do have a painful association of the past. And likewise, believing that there is a change happening takes a little longer time to get reflected in terms of the fund approach. Okay.
Sure.
And now we are in this phase where, because of the government push and because of prolonged slowdown in terms of consumption is also expected to see a revival. Okay. Which means that we are looking at a broader market revival. Where does infrastructure sector come into play? My only point is that, see, no growth can sustain for a longer time unless we have the required infra in place. Okay. Like in the past, whatever GDP growth or whatever infrastructural growth that has happened over past 20 years, if I just take an example of one consumption data point in terms of, say, travel, we have created over last 10 years, the number of airports have moved from, say, 74 to 162. Likewise, the impact of the airport infrastructure increasing in terms of the number of passengers flying has been substantially higher. I have the data for past 20 years, wherein the GDP growth, which is in value terms, has increased by almost like 5x, whereas the number of passengers over past 20 years has moved something like in excess of 8 times. That is the kind of growth. So this would not have happened unless we invested in the airport infrastructure. Likewise, for us to have a very multi-decadal strong consumption, infrastructure should sustain its growth pace. The investment needs to happen now. And if that is true, and we are looking at a 20% earnings CAGR, I don't see a
Sure.
material shift happening. In terms of the approach, coming back to your question, in terms of diversified, I believe diversified offerings may not have a significant allocation or the right allocation that infrastructure deserves to have at this point of time because of certain sectoral approaches that they choose. And hence, we believe that it should be part of anybody's satellite portfolio. And yeah, that's my view on the infra positioning.
Sure. Thanks, Bharti, for patiently giving all your replies. So we'll try and take some questions from our audience and try and address some of the queries that partners have. There's a question from Mr. Dinesh. What were the major reasons for the infrastructure underperformed prior to 2021 for more than a decade? Maybe I can say you've already covered some part of it, but maybe if you can reiterate for the benefit of everyone,
Sure.
Bharti.
Thanks for the question. So, see, as I highlighted, there were a lot of macro or uncontrollable factors, both domestically as well as globally. It started out from the global financial crisis. Then, domestically, we had a lot of scams which got exposed, which had a direct bearing on the private sector because it had a direct hit on the private sector investment that went into the country, and a lot of projects got delayed. It became unviable. Hence, we did not see private coming back with the investment. Then we had a lot of new reform kind of initiatives taken by the government, which further derailed the investments happening. But now, given that those things are in the past, the GST or the RERA kind of reform are very well accepted, and it is the way of working now. And hence, we are expecting that the policy initiatives which were taken by the government are stable and incrementally should benefit private sector participation as well as PSU participation in the space.
Fair point. So, Bharti, the next question is the attendee has not mentioned their name, but that would you be able to highlight what would be the rough allocation between large, mid, and small cap within this sort of thing? I know, Bharti, it's a tough one because you've not created the portfolio, but maybe from a broad perspective. And second, I do the same. The investor is slightly scared that there is an AI bubble happening globally. Do you think that the Indian market should be impacted? Thankfully, I don't think so. Infrastructure should be, but I leave it to you, Bharti, to answer that one.
Sure. Thanks for the question. So, in terms of the broader market capital allocation, see, given infra, so just to give you some sectoral representation from a wider universe of, say, NSE 500, Nifty 500, of the 500 stocks, roughly 180 or 36% in terms of the number of stocks is the infrastructure representation based on the sectors that we have considered. Whereas from a market capitalization, it's just 28%, which in itself indicates that a lot number of companies are in the mid and small cap categories, and hence, by nature, it will be more inclined towards mid and small cap compared to large caps. That is on one. To the second question on AI bubble, so we do understand that there is an AI bubble globally, but from an Indian context, we are nowhere at the start of the AI bubble because we are not at the forefront of investment in the AI side, right? Even in terms of the basic data storage capacities, if I just give you some parallel and to the US market, so the US capacity is 54 gigawatt of data storage of the 445 to 450 gigawatt of its power consumption, which is close to 11%, which is projected to increase to 25%. Where does India stand? India's power consumption is 245 to 250 gigawatt, and our capacity is 1.25, which is 0.5% of our power is towards data centers. And we all know that even from if you have to avoid any kind of cyber wars or any such situations, we need to have basic data, something like a financial data stored within the country, even if not the social media. So in order to have that kind of capacity, we need to invest first. As I mentioned, we are just at 0.5% of our power consumption. So there is a long runway of, there is a long way to even start getting into an AI bubble kind of a situation. So I don't think so there will be any impact to the Indian markets or the infrastructural growth story.
So maybe if any, I think the infrastructure requirement in India will only go up. And very interesting data point that you had. We always thought infra is a smaller sector with very few companies, especially the larger names. But 180 stocks out of 500 stocks, I'm sure, will give confidence to investors that there's a huge investment pool that you can invest in.
Vaibhav, just one more point I would like to add, maybe to the overall conversation. Uh, Compared to past and now, as I mentioned that earlier, there were less number of sectors and less number of companies,
Correct.
and it was largely EPC oriented. Now we are talking about a much wide, diversified, and more number of companies and more companies getting listed, which means that the universe is only widening, which gives you ample amount of opportunities to maneuver based on which sectors or themes you're looking positively to play out.
Absolutely, I agree with you. So I think the infrastructure of maybe 10 years back and infrastructure of today is completely different. And that's why investors should have a different lens on how they look at this sector. Another question from Mr. Sriram, will there be exposure to companies involved in rare earth materials, semiconductors, etc.? And is there enough investment universe available within this space?
So thank you, Mr. Sriram, for the question. In terms of rare earth, so no significant exposure to rare earth because that would even say we are boosting a lot of solar manufacturing capabilities, but over there also we do not require significant amount of rare earth. But what it could happen is it could be impact the semiconductor part, but semiconductor also, as India has just started investing, we just have one inaugurated facility and a few more in the pipeline, and these are also very low hanging or assembly kind of work. So we are just starting with the basic assembly low hanging fruit, and slowly and gradually will get into more value added. So there is again no direct exposure to rare earth in a very meaningful way.
Sure. There's a question from Mr. Madhava, and I know Bharti, you sort of covered it, but it will benefit again to reiterate it. So the question from Mr. Madhava is, how Miraset Infrastructure Fund will be different from the existing infra funds? Maybe you don't need to compare with others, but sort of what strategy which makes you sort of unique, maybe you can cover that again.
Great. Thanks, Mr. Madhava, for the question. Again, see, the theme in itself is infra, so we cannot diversify much. But again, within the theme, we know how the sectors or different sectors have performed over time, over varied period of time, and hence we'll try and identify opportunities across these different themes. Right now, we believe that the investment into the core power, led by urbanization, led by data center, led by EMS and semiconductor kind of play, these are the high growth investment where the investment is just starting to pick up. So these are more structural and high growth investments where a larger allocation would be balanced by matured portfolio, which is companies which will have stable cash flows and stable growth profile, and to have some satellite portion more tactical in nature in terms of either a valuation play or something like a change in regulatory environment or corporate restructuring. So those would be more tactical in nature, not a significant allocation in the portfolio.
Sure. Thanks, Bharti. I think a question from Mr. Imran, that given that infrastructure is a highly capital intensive sector, we had previously encountered challenges with debt levels of infrastructure companies. So his question is, does the current leverage of these companies within this sector look reasonable and sustainable or no?
Thanks, Mr. Imran, for the question. For this, I would just like to draw your attention to one slide. Just a second. Just one sec.
Yeah, sure.
Sorry, there is some technical glitch at my end. I'm unable to share my screen. But maybe what I can just say is, as we discussed, the corporate debt somewhere peaked around 63% if we compare. So the broader data points that we have, I'm looking at a corporate debt as a percentage of GDP, the data that we get access to as a larger leverage data. So corporate debt to GDP peaked somewhere around 63% during 2013 to 15 period. And that was also the period wherein, as I mentioned in my earlier remarks, that we saw most of the, because of certain policy or no decision making happening at the government end, resulted into approval delays and resulted into certain of the projects becoming unviable because of the IDC getting added. Which means that to a greater extent, I believe that it was not with regards to certain corporates that they are, what do you say, project identification went wrong, but due to certain external factors that the projects went bad and hence the leverage on the balance sheet increased. Now, post 2015, most of the companies are focused on deleveraging, and we can see that the leverage is far more comfortable, backed by cash flows. And if we compare this data point, which I gave, say corporate debt to GDP, that is currently at about 50 to 53% compared to the peak of 63. And hence, we believe that they are in a much better position to take leverage for growth.
Bharti, I think there's a question from Mr. Rutra. How would you suggest investing in this fund, lump sum or SIP?
So thank you for the question, Mr. Luthra. In terms of lump sum versus SIP, so I would suggest a combination of both, which is, say, the allocation would depend on you, but of the entire money, you can have 50-60% or say closer to 50% deployed in terms of lump sum and rest in terms of SIP.
Yeah,
because
thanks.
The investment by nature would be we did not cover on the say holding period, but then by nature infrastructure are typically longer gestation projects, and hence if we stayed invested for a longer period of time, we should see the actual benefits playing out. So hence SIP would help to participate and stay invested from a longer period of time.
Yeah, thanks, Bharti. Maybe just to add, Mr. Rutra, to what Bharti mentioned. See, infrastructure as a sector, is a sector which has the longest gestation period. Some of the projects do take 3 years, 5 years, 7 years to play out. So if you want to play this sector, your ideally time horizon should be longer to make the investments so that you can reap the entire benefits of the investments made within that sector. And hence, when you want to invest for long term, of course, SIP remains one of the best disciplined ways of investing. It has shown time and again the ability to average out, corrections and work it to your advantage. So we always suggest that investors in this sort of sector would definitely benefit by taking SIP route and also by investing for a longer period of time, so that both of these advantages work in your favor. There's a question from Mr. Abhaya, and it's a tough one because it's not a comparison of either or, but maybe Bharti, you can try share your perspective. In between consumption and infrastructure, which sector should you give a preference to? I know where your answer will be, but maybe an unbiased view of how do you look at both these sectors?
So, see, as I highlighted earlier, my view on the sector or where the markets are headed. As I mentioned, there is a government push on consumption, and consumption historically has done well. Plus, India is a very large consumer market. Hence, consumption is a very long-term theme which should still play out, which should continue to play out. Where infrastructure comes into play is that right now we are into a very high growth phase because the investment period is just starting. For the consumption to sustain for a long period of time and for our dream of Viksit Bharat to achieve the $30 billion target that we have, if we don't invest in infra now, then probably will be too late. We have to start that investment right now on an immediate basis is what is the need of the hour, basically, I would say. And hence, we are entering into a very high growth, sustainable high growth into the infrastructure domain, and hence I believe that it's very difficult for me to put infra or consumption into two different baskets and say that this is better over the other. I think all would do well, and infra is at a juncture where it will continue, or it has potential to deliver a sustained high double-digit earnings CAGR. That's
Sure.
what I would like to put it.
Sure. Yeah, thanks, Bharti. I think we've tried to answer most questions from the audience in this webinar. Maybe I just wanted to conclude by showing one very important slide and the point that Bharti sort of highlighted is timing of some of our thematic offerings. So one is, you've seen that we've got only 3 structural themes that we've launched in our 18 years at Mirei. We've never launched a single sector sort of product. So we had launched a consumer-based fund in 2011. At that time, there were hardly any consumption-based products in the market. So we wanted to create a fund where we believe the next 10, 20 years remain very strong from a structural point of view. If you see, that product has done exceptionally well, has beaten most sort of flexi cap products as well, and most active products by a wide margin. From the time we launched it, the 3-year CAGR returns of the fund versus the benchmark, which is the Nifty 500, you can see about a 10% alpha, which the fund had been able to launch. Second, we had launched a healthcare fund about now close to 7.5 years back. Again, that time pharma funds were in vogue, but we had launched a healthcare, which we thought is a far broader theme, which includes hospitals, diagnostics, and the other elements of the space. And that theme also played out well. The 3-year CAGR returns for that fund has been 30% versus Nifty 500, which generated 15%. So again, a 15% sort of outperformance. Banking and financial services, again, so not limiting ourselves to only banking, we had launched it, including financial services. Again, this product has done very well. The 3-year return had been about 18%. The Nifty 100 also did quite well, but during this period, but this fund also sort of did quite well. So the point I wanted to highlight to the audience is, we've been very, very cognizant of when we launch thematic products. We remain very confident that we have the right manager, the right skill while launching this product. And we remain very confident that investors should get a good investment experience while they invest in this product. So any last parting words from you, Bharti, before we conclude the call?
So just before we conclude, I would just like to say that since India dreams to be amongst the top 3 or to be amongst the top 2, because in order to achieve that dream, in order to grow 5 to 6x from where we are, we need to start investing now. And unless and until we don't do that, we are not going to reap the benefits. So I would just like to say, we are at the start of the investment cycle, and we are start of the Viksit Bharat 2047, and the investment cycle should sustain for a fairly long period of time. And we would just urge that everybody starts looking at Viksit Bharat in a more positive way, and an investment positive way.
Sure. So thanks, Bharti, for sharing all your perspective in today's webinar, and thanks everyone for a very, very active participation in today's webinar. If you have any doubts or any queries, do feel to contact our local branch teams at our respective locations, and we'll be sort of very happy to address all your doubts and happy to support you. And like we've seen, market has sort of seen a much better last month since the last 1 year had been quite challenging. We hope this momentum continues. So happy investing to all of you. Invest for the long term, and hope you can all create good wealth for yourselves and your family.